Hello students, ang topic natin ngayon ay Basic Concepts of Stocks. Some corporations sell stock to raise funds to operate their businesses. Stocks are the shares in the ownership of the company. The holder of stock, a shareholder, has now bought a piece of the corporation and depending on the type of shares held, may have a claim to a part of its assets and earnings. Ownership is determined by the number of shares a person owns relative to the number of outstanding shares. For example, if a company has 1,000 shares of stock outstanding and one person owns 100 shares, that person would own and have claim to 10% of the company's assets and earnings. We have two types of stocks. They are common stocks and preferred stock. Common stocks are much cheaper than preferred stock. But, in common stock, it entitles the owner to vote at shareholder meetings, while in preferred stock, shareholders do not have voting rights, though they have a higher claim on assets and earnings than the common stockholders. Owners of preferred stock receive dividends before common shareholders and have priority in the event that a company goes bankrupt and is liquidated. What is dividend? Dividends or dividend is a distribution of profits by a corporation to its shareholder. So, ito yung kita ng kumpanya na paghahati-hatian ng mga may-ari. Example, a certain financial institution declared a 100 million pesos dividend for the common stocks. If there are a total of 250,000 shares of common stock, how much is the dividend per share? So, solution, we divide the total dividend to the total number of shares. So, meron tayong 100 million pesos divided by 250,000 shares. Yan ay 400 pesos per share. So, if a shareholder owns 100 shares of stock, he will receive 400 pesos times 100 shares is equal to 40,000 pesos dividend. Another example, a certain corporation declared a 3.5% dividend on a stock with a par value of 1,000 peso. Mrs. Go owns 175 shares of stock with a par value of 1,000 pesos. How much is the dividend she received? So, solution, we multiply the dividend rate, par value, and the number of shares. So, 3.5% times 1,000 pesos times 175, Mrs. Go will receive 6,125 pesos dividend. Stocks can be bought or sold at the stock market at its current price, called the market value. The stock market in the Philippines is governed by the Philippine Stock Exchange or PSE. When a person buys some shares, the person receives certificate with the corporation's name, owner's name, number of shares, and par value per share. Par value is the stated value per share amount as stated on the company certificate. Unlike market value, it is determined by the company and remains stable. So we use index to measure stock market or a subset of the stock market. It helps investors compare current price levels with past prices to calculate the market performance. It is computed from the prices of selected stocks, typically a weighted arithmetic mean. One example is the PSE Composite Index or PSEI, which is composed of 30 companies. Ito yung 30 largest publicly listed corporations of the Philippines, carefully selected to represent the general movement of market prices. Stock indices are reported in the business section of magazines or newspapers. So, dito, pwede kayo makakita ng gantong table, which means, yung 52-WK, high or low, yan yung highest or lowest selling price of the stock in the past 52 weeks. While stock is the 3-letter symbol for the company na ginagamit nila pag nagtra-trade sila. Then, high-low, so that's the highest or lowest selling price of the stock in the last trading day. DIB, yan yung dividend per share last year. vol or yung volume. So, yan yung number of shares in hundreds traded in the last trading day. So, dyan, sa stock XXX, nakita natin na 905 siya, meaning 905 times 100, yan ay 90,500 shares yung nabenta last trading day. Close is the closing price on the last trading day. So, yan yung 57.29. So, yan yung presyo nung last na trading day. The net CHG, yan yung net change between the two last trading days. So, in this case, yung stock XXX, the net change niya ay 0.10. Yung closing price niya the day before the last trading day is yung 57.29. Ito yung last trading day. Yung the day before, so yan yung pagmaminus lang natin. Last trading day minus the day before the last trading day is equal to the net change. So, dyan para mahanap natin yung price the day before the last trading day. So, transpose lang natin tong X. So, and tong 0.10. So, yan ay 57.29 minus 0.10. So, the closing price the day before the trading day is 57 pesos and 19 centavos. Stock indices are also reported online. Yan, at this link. Then, makakakita kayo ng gantong table. So, yung value dyan, or yung val, yan ay market value of the index. CHG is the change of the index value from the previous trading day. So, yung value today, so ito yon value today, minus value yesterday, para makuha ito. Then, yung percent na may CHG, yan ay ratio of CHG to val. So, yan yung change to value. Buying and selling stocks. To buy or sell stocks, one may go directly to PSE. However, most transactions nowadays are done by making a phone call to a registered broker. So, ano yung broker? So, that's a person or firm who arranges transactions between a buyer and a seller for a commission when the deal is executed. Or pwede rin naman na mag-log on to a reputable online trading platform. At kung meron kang account sa online trading platform, pwede mong ma-encounter yung gantong table. Which means, itong size, bid size, yan yung number of individuals wants to buy a stock and the total number of shares they wish to buy. So, dito, merong 105 na individuals na gustong bumili at ang total ng gusto nilang bilhin ay 352,670 sa halagang 21 peso and 60 centavo. So, yan yung price na gusto na willing ibayad ng mga buyer. Pero, sa ask price, ito yung price na gusto ng seller na ibebenta niya yung kanyang stocks. So, kung ang gusto ng buyer ay 21.60, ang hinihingi naman ng seller ay 21 pesos and 80 centavos. Then, yung ask size, dito naman, how many individual sell orders have been placed in the online platform and the total number of shares these sellers are willing to sell. So, meron tayong isang seller na ang gusto lang niyang ibenta ay 15,000 shares. Stock yield ratio are used to compare two or more investment. It is also called as current stock yield and means the ratio of the annual dividend per share and the market value per share. Example, Corporation A with current market value of 54 pesos gave a dividend of 8 pesos per share for its common stock. Corporation B with a current market value of 92 pesos gave a dividend of 11.50 per share. So, solution, we use the formula stock yield ratio is equal to dividend per share over the market value. So, for Corporation A, yan ay 8 pesos divided by 54 pesos. Yan ay 0.1 1481,481 or multiply natin sa 100%, yan ay 14.81%. While in Corporation B, the stock yield ratio is 1150 divided by 92, yan ay 0.125 or multiply sa 100%, yan ay 12.50%. So Corporation A has a higher stock yield ratio than Corporation B. Thus, each peso would earn you more if you invest in Corporation A than in B. If all other things are equal, then it is wiser to invest in Corporation A. Some investors think that a certain stock is undervalued, suggesting that the price will go down in the future. They buy stocks at a lower price now and sell it at a higher price in the future. By contrast, if a certain stock is overvalued, investors would want to sell the stocks at a higher price. So, feeling nila, bumababa, tumataas yung presyo. At pag bumaba yon, mas magandang bumili ng stocks dahil nga mura, at pag tumaas, dun mo ibenta. But, the theory of efficient markets counters this assumption. This theory was developed by Eugene Fama, an American economist in the 1970s, which state that stock prices reflect all available information. It is a direct implication that it is impossible to beat the market consistently on a risk-adjusted basis, since market prices should only react to new information. So the slogan, "Trust market prices," can sum up the theory. One can trust market prices because stock prices are accurate. They already give a correct measure on the value of a stock precisely because prices are already based on all information and expectation about the stock. We have three forms of efficient markets. The first one is the weak form of the theory. So sabi dyan, stock prices already reflect all past market trading data and historical information only. Thus, knowing past data will not give investors an edge. If the weak form of the theory is true, then a technical analysis or analysis of past prices will not yield new information and hence will not lead to systematic profits. The second one is the semi-strong form of the theory. Sabi naman dito, stock prices already reflect all publicly available data, including those involving the product, management team, financial statement, competitors, and industry. If the semi-strong form of the theory is true, then doing a fundamental analysis or gathering all public data will still not lead to systematic profits. Then the third one is the strong form of the theory. So sabi naman dito, all information, public and private, are incorporated in the price. So if the strong form of the theory is true, then investors still cannot gain systematic profits even if they gather information that is not yet publicly known. The theory of efficient market says all available information are already incorporated in the stock price. Thus, investors cannot generate systematic profits except by chance. It assumes that, on the average, investors receive a return that pays off the time value of money and the risk associated with the investment. However, this theory of efficient market is only a theory. Kung natuto ka, click like. Don't forget to subscribe. Thanks!